This Week in Startups is brought to you by Squarespace. Start building your website today at squarespace.com. Enter offer code TWIST at checkout to get 10% off. And LinkedIn. You already know LinkedIn as the world's largest professional network. It's also a better way to find great talent. Go to linkedin.com/twist and get a $50 credit toward your first job post.
To get started here, we're going to talk about the hottest topic with two of the most credible executives in the space. I speak, of course, about ICOs and cryptocurrency. So let me bring Brock Pierce and Vinny Lingham up to the stage. Let's give them a big round of applause. To give you the background, these two gentlemen have been playing in the crypto space for years, and I've been talking to them about it. And every year that goes by, or seemingly every month, they go from being delusional and insane to being right and more right. So Bitcoin hit $6,000 yesterday, I think. And Vinny had a poker game like 3 years ago at my house. You're like, it was at 1,200. Like, it's going to crash and go down to 200. It was going to go down to, it was at 1,200. It's going to crash. It's going to go to 400, but then it'll go up to like 4,000. And that's exactly what was going to happen. So I'll start with my question to you. Is how did you manipulate Bitcoin to do that? How are you guys manipulating the price so effectively that you can just hit those numbers? But Vinny, of course, you're doing Civic, and we'll get into that in a minute. And Brock, you're obviously doing BlockchainCap, and you're on the Bitcoin Foundation, Block.one, the most successful ICO to date. We'll get into that in a minute. But let me ask you about this criticism right off the bat, that Bitcoin is based upon nothing, and therefore, since there's nobody backing it, the whole thing could go to zero. I was kind of in that camp for a while myself of saying, like, you know, this is a bubble. Obviously, it's a bubble. You wrote a piece yesterday talking about admitting there's some bubbliness here. But it seems to have survived a number of different moments in time which should have killed it. China banning it, Putin banning it, then embracing it, then banning it, whatever. What are the chances Bitcoin goes to zero, and how much of this is a bubble? I'll start with you, Vinny.
So I think the way to think about this question is which Bitcoin, right? So you've got you got Bitcoin, you got the main chain, you've got Bitcoin Cash, you've got Bitcoin Gold coming out now. You can have a stick with 2x Bitcoin. So the real question is, which Bitcoin goes to zero? Because I don't think all these chains survive long term. I think that there needs to be one main chain for Bitcoin. That's personally, look, there'll always be a chain that kind of survives, but if you look at the way Bitcoin is built, you know, the difficulty, etc., the ability to attack it, etc., I think Bitcoin is safer and more secure with one main chain that has a ton of hash power on it. But that's just a personal view based on the original white paper design. And so, will Bitcoin go to zero? No, because the hash power will move from one chain to another, so there'll always be one chain that has most of it, but there may be fragmented chains that go to zero along the way.
Brock, what's your call on Bitcoin today in 2017? We have it forked, right? So you now have Bitcoin
and Bitcoin Cash.
And Bitcoin Cash. Explain to a layperson what the difference between those two are.
Well, so all of this is built on open source sort of technology. And open source, I think we've seen for some time now, is kind of a superior model, though we haven't seen it take off with an exponential sort of curve. And the reason for that is that it's voluntary. Working on open source projects means that you're volunteering your time either because you want some social credit or you believe in some cause. And when something needs to be fixed, there's no one that's like committed to doing it. So what the blockchain is doing and tokenization is adding the economic incentive to the open source development movement so that you will make more money as a developer contributing to open source projects than working at startups. And that's what's happening. It's like if you could own a piece of the internet as a protocol, if you could have owned part of these protocols, and that's changing the game. It's going to make the entire world will go open source, I think, fairly quickly because of the economic incentive where you're moving from voluntary work to incentive. Now forks. Forks are good. Forks are natural. Forks are like evolution. You would not be in this room if it were not for forks. Every time a baby is born, a fork is occurring. Now you have non-contentious forks, And then you have contentious forks. Contentious forks can lead to extinction eventually, and sometimes that's progress. And because it's open source, everyone gets to watch how the sausage is made, and it's not pretty.
And so we have these fights occurring when these things fork, but the Bitcoin Cash forking that occurred, I don't know how many months ago. July. How has that fared in the market?
It's trading at about 5%, 6% of the price of Bitcoin. So if looking at it externally, it would look like it's failed and it's dying. As people in the ecosystem, I think it's underpriced relative to the price of Bitcoin. Take a look at like Ethereum Classic vis-a-vis Ethereum. I would imagine that it should be trading at least 10, 15, 20% of the price of Bitcoin. I could argue.
Why did they fork it? What was the main issue for Bitcoin Cash to exist?
The real issue in Bitcoin is fundamentally, and this, I don't want to get too technical, but there's two schools of thought in Bitcoin. One is that the original system design and architecture can scale to handle Visa-level transaction scales, thousands of transactions per second. And that's called on-chain scaling. So you increase variables like the block size or the block weight, they call it now. And that, move from 1 megabyte to 2 to 4 to 8, etc. So you can fit in more transactions in a block. But that leads to some arguments around centralization, etc. And the other school of thought is that Bitcoin, the base Bitcoin blockchain should be 1 megabyte forever or for a long period of time. And you build what they call level 2 scaling solutions on it, Lightning Network, etc., SegWit. And you would scale without adjusting those base level variables. And so these are two different schools of thought. And they're really at war with each other right now, known as the Bitcoin Civil War, where one school of thought is we should scale by increasing the basic variables and not worry about things like centralization in the short term because it won't matter much long term, versus level 2, which opens up a new world of opportunity for businesses who want to innovate on top of blockchain as well.
All right. I'm going to get this on record now so we can make a clip out of it.
Uh-oh.
Tell me the range which Bitcoin will trade at 1 year from today. So if we're sitting here next fall, 2018, what will have happened in the past year? Bitcoin low, Bitcoin high?
Somewhere between 0 and 20,000.
Okay, great.
Yeah. If you're talking about the main chain, the main Bitcoin
main
chain.
Bitcoin, what will the low be in the next 12 months, and what will the high?
0 and 20,000. and I'll tell you why, because there's a contentious fork that's about to happen next month, right? And essentially, right now, the miner is signaling about 85% hash power moving to the SegWit 2x chain, which becomes Bitcoin. But what people see right now is the current Bitcoin chain. That will be, there'll be a chain split, so you'll have two chains. And with the hash power remaining, it is very likely that chain goes down to 0 or very close to it. Very likely, unless they do an emergency hard fork with a difficulty adjustment and fork out. So Brock's right.
So Bitcoin, the classic, before this major fork that's coming, the second major fork in 6 months.
Well, third, because there's Bitcoin Gold next week.
And Bitcoin Gold next week. What's Bitcoin Gold?
So Bitcoin Gold is basically a bunch of people decided that, because Bitcoin has become really only mineable by people using ASICs, which is just high-end chips, higher level than GPUs. They want to change the proof of work algorithm so that it works on any normal PC, any CPU, so you can all mine Bitcoin, and that way it's more inclusive, more participatory. Everyone in this room could mine it in theory, and they're maintaining all the other variables. Again, it's a chain. As far as I know, there's replay protection on it as well, which means that the chains it's not really a chain, but it's a fork. It's like an altcoin. But yeah, it's happening, and people are now buying Bitcoin because they want to get some of the Bitcoin Gold. Because if you hold Bitcoin before a fork, you get both coins.
So buying Bitcoin gets you into Bitcoin Cash and Bitcoin Gold, and then you
not
can
Bitcoin Cash anymore because that fork's already occurred. You have to own the token at the time of the fork.
Yeah. Right.
So forking is, imagine if you saw Fox or CNN today, and let's say you didn't like one of these groups, or you were users of those groups. In this open source forking world, I can literally say, I'm going to go create Fox 2. I'm going to make content or CNN 2 the way that I want. And a bunch of those employees and viewers and fans may all come with me, and I might end up being bigger. It's basically getting rid of intellectual property in some way. It's where you're literally saying leadership can be removed at any time by enough of the constituents basically walking off and launching version 2 at the same time, and then you will determine who wins in the end.
And
sometimes you'll see a team walk away and literally replace the existing management team
because they're not under any kind of employment agreement or anything. They can just leave and go do their next gig.
We're all going to be unemployed in the future, and I think what you're going to end up being is members of tribes, and those tribes are going to be decentralized, autonomous corporations of products and services we like.
Yes, Squarespace. I love Squarespace. We use it for Launch Festival Sydney, Angel the Book, Angel Podcast. We love Squarespace here at This Week in Startups. You can turn your cool idea into a new website and showcase your work, blog, publish content, sell products and services of all kinds, promote physical or online businesses, announce upcoming events or a special project like launchfestivalsydney.com, which we're doing. Next June, we'll be in Sydney for Launch Festival, and we built a Squarespace site in just a couple of minutes. Beautiful templates created by world-class designers, powerful e-commerce functionality that lets you sell anything you want online. Everything is optimized for mobile right out of the box. So when you pull up a website like launchfestivalsydney.com, you'll see it looks great on your iPhone, it looks great on your iPad and your desktop. Yes, you can buy domains and choose from over 200 plus extensions, analytics to help you grow your business in real time, built-in search engine optimization, free and secure hosting. And there's nothing to patch or upgrade ever. 24/7 award-winning customer support. So here is your call to action. Go to squarespace.com for a free trial. And when you're ready to launch, use the offer code TWIST to save 10% off your first purchase of a website or a domain. That's right. Use the promo code TWIST to save 10% off your first purchase of a website or domain. Just go to squarespace.com. So if you're a developer and making $150,000 a year working at Google or a startup, you could buy $100,000 in whichever coin you like most, go to work every day trying to increase the value of it.
Yes.
And
you'll make a lot more than that. I mean, you should all quit your jobs if that's what you're doing.
Right. Okay, got it.
I mean, instead of working in the world of dinosaurs.
This is why we have thousands of altcoins right now. Right. Because these developers were, they own too small a piece of Bitcoin or whatever it is after took off, and they decided to go in, and for lots of reasons. But they said they leave the Bitcoin community, they go build a new type of coin, and they rally people around it. That coin goes up in value, so the incremental work they put into that leads to disproportionate returns for them because they started the project or something along those lines.
Well, so the point that I've been highlighting here is that the corporation itself is kind of where the problem lies, that I think, directly attribute many of the world's problems to the corporation. Corporations didn't exist prior to the Industrial Revolution in the way that we think of them. Prior to the Industrial Revolution, over 90% of the world's population were entrepreneurs. They were tradesmen, craftsmen, etc. Other than the church and state, you didn't have any giant centralized institutions. It was the Industrial Revolution that led to the corporation as we think of it, and that was created as a vehicle to be able to take in the capital necessary to finance this. And that moved us into a world of like Six Sigma, repeatable processes. It was about how can I create efficiency of scale to deliver better price, and how can I make that a really repeatable process. Now, technology has changed all of that because we moved from a world where it's about building really repeatable processes to operating with agility. Because of all these exponential sort of technology trends, agility is what is rewarded. That's how success is created these days. But you have three general constituents in these corporations. You've got the employee, you've got the customer, and you've got the shareholder. The customer just wants the best product and service. The employee wants to do something they feel good about and be remunerated to the degree that they can live their lives, and the stockholder just wants to get maximum ROI. There's a complete misalignment of interest between these three parties. They all essentially want the best deal. The customer would like the product for free if given a choice, money for nothing, checks for free, whatever. Then you've got the employee that would preferably like all the profit if they could have it, and the shareholder still wants all the money. So the problem is with this misalignment of interests, it should come as no surprise that we've got lots of problems in the world. A decentralized autonomous corporation, when you create a software-based entity with tokens, actually has the potential to solve all of these problems. And that is if I like a product or service that someone like Civic is producing, if I want to be a customer of that product, I may need to own those tokens. Imagine if you can only buy Apple product by owning Apple stock. What happens is if I want to become a customer of that product, I'm going to end up owning tokens, which makes me look a little bit like a shareholder. And now that I'm benefiting from everything happening within the ecosystem, I'm likely going to want to be a contributor too, meaning I'm going to tell my friends about it. I might actually go develop apps on top of it. I might go get involved and just contribute all of my effort to it. And so what happens is those three roles become collapsed into one, where there's no misalignment of interests. Anything that any of you do to add value to the tribes that I support benefits me. And so instead of in this old world where I've got information of value, I think, oh, in this zero-sum game, I can do something with this, so I better keep this knowledge to myself. It's all proprietary. Anything anyone does to support that system benefits me, anything I do. So what happens is, if I have knowledge, I should give it to all of you. I want to give it all away, open source it, because if any of you do anything with that information, I benefit. And so you don't want to build proprietary things. You can go from having a world of me to a world of we, because everyone benefits most by sharing everything. You know, the corporation is created a misalignment of interest.
This is what the employee stock option plan was supposed to do. Why didn't that work in your mind?
Again, it's just an old architecture. It's a paper product.
It did work to some extent, right?
Yeah, I mean, you have this cult of people working at Facebook who are like, oh yeah, copy Snapchat? Sure. It will make our price go higher. So they're part of that tribe that's like, we have these options.
It doesn't work, but
the users don't.
It's the same problem that Bitcoin has. I mean, once you get to a certain level of scale where your individual contribution doesn't move the dial that much, that's when it breaks down. In a startup, everyone...
Why does it break down?
Well, because your individual efforts cannot move the dial that much.
And that's
generally.
a bummer
it's
for
a bummer.
people.
Absolutely.
They don't feel the feedback loop.
So then they leave and they start new companies.
Yeah.
So Facebook has to overpay employees to stay.
Right.
And that's how they maintain their IP.
Right. And it's working so far.
It works because they're on a high growth trajectory. It doesn't work when their earnings flatline and go down.
Okay, the thing I keep hearing about, and I was like, this is an idea that I thought about when I first heard about the coins, and it turns out there's a company doing it called Steam It.
Yes.
Yeah, that's my partner at Block.one, Dan Larimer.
He built this Steam It project.
He also built BitShares. He also invented the concept of a DAC, or a decentralized autonomous corporation. He built the first decentralized app, or DApp, called BitShares, which was a decentralized exchange, and then he built Graphene, which is version 2 of the tech, and Steam It that came with it. His last two projects are the most successful blockchain applications in terms of use in the world.
So Steam It is like Dig or Reddit, where you post some piece of content, could be an opinion piece, could be a video explaining something, and then people vote it up with tokens of some type. I don't know if it's Ethereum or...
No, Steam is the token.
Steam is the token. So you vote it up, but then you can cash out those Steam tokens for real money.
Yeah, imagine on Facebook if everybody had Facebook money, and anytime you liked something, you could give them a penny, a nickel, a dime, and you started to have this...
FU coin.
Yeah, sure, exactly. Call it whatever you want. But what's happened there is you start to get this very interesting sort of feedback loop.
So if a like was a tenth of a penny,
are benefiting from the performance of the product, which it's really community building, which is why I like to say tribe. What you're trying to do is get thousands of people to volunteer their time and effort because they've become participants, they've become contributors to your ecosystem. And it's really all about community building. If you want to be successful in this new market, it's all about how big of a community can you ultimately build. Because you're getting thousands of sort of volunteers that are contributing money, time, energy, et cetera, because they believe in what it is that you're doing. And a company that has 10 employees can't compete with an idea with 10,000 followers.
What's the likelihood, Vinny, that a Facebook, a Reddit, an Uber, an Amazon releases a coin to create one of these kind of economies? Quora comes to mind. Reddit and Quora seem the most likely to me because they have pretty savvy management teams and they have this infrastructure in place. What do you think the chances are of a major company, 100 million users or more, billion-dollar valuation more, releasing a coin in the next year to do this kind of thing?
I think it's very likely that one of them will do it. I think there's a good chance. Look, if Amazon...
Who would you put in the list?
Amazon should be the first to do it, if you think about where they're positioned. They've already got Amazon coins. All they have to do is make sure there's a blockchain.
They do have Amazon coins?
Yeah, but it's not blockchain-based. It's a digital currency for buying virtual goods.
Oh, okay.
Yeah, so they could take that to the blockchain and say, okay, Amazon coins are not tradable. It's a real digital currency and more transparent. So they should or could be the first to do it. I think it's almost inevitable that one company will do it in the next year or two, one of the big companies.
Which one is working on it? You must know. Here's some back channel. No. Who's secretly working on blockchain?
Everyone.
All of them.
All of them are.
Yeah.
Google, Facebook.
All of them.
Yeah, they're all working.
Zuckerberg is the master stealer. What's the chances he has a coin out there? No, I mean, I just say that based on facts. Based on behavior. I mean, he's the master thief, right? So what is the chances the master thief deploys this in the next year or two?
Look, these companies don't move that quickly. So,
I don't know. He copied Snapchat right quick. So
yeah, it took a couple of years. But this, and he'll try and buy first. So we'll hear about that first before they build. Look, I think you will see in the next year or two it happen.
I have too much information, so no comment.
Yeah.
So they're working on it, correct?
No comment.
Have you seen like job wrecks and stuff like that for crypto people?
I mean, at entities, yeah. I mean, it's. You'd be shocked. Like J.P. Morgan, Jamie Dimon has a direct report with over 100 people working for him in this area. So,
Wait, Jamie Dimon, the person who said Bitcoin's a scam?
Yes.
So he's got 100 people.
He was very clear to say that blockchain is legit. I'm not a fan of Bitcoin. Why would we want anything other than government-issued money? Now, Jamie Dimon is doing his job. He's talking his book. His job as the incumbent is to protect the status quo. Our job as the innovators is to challenge the status quo. So there's nothing. Jamie's doing his job. His fiduciary duty is to say this stuff. And if anything, thank you, Jamie, for continuing to validate what we do. When you see people make those types of comments, that's when you buy.
Really?
Absolutely.
Hey everybody, let me take a moment to thank our friends at LinkedIn for partnering with us here on This Week in Startups. Have you tried to hire somebody lately? It is hard. It's brutally hard. I know. I've got many open positions at Inside.com, at Launch, trying to grow This Week in Startups and the Angel podcast. It's hard to hire people. There is a war for talent today in 2017 going into 2018. It's incredibly hard to find great people. And you know the drill. You post to those job boards and you hope that you're going to find the right person. But let me ask you a question. When was the last time you checked a job board? You didn't. You haven't checked a job board in forever. Most people never check job boards, but there is a place where people go daily to grow professionally and communicate with other senior level executives, and that is, of course, LinkedIn, and 70% of the U.S. workforce is there. You know it as the world's largest professional network. We all do, but it's a great way to find talent. Just ask any of the hundreds of thousands of businesses who have posted to LinkedIn Jobs over the past year. Yes, LinkedIn Jobs. 22 million professionals view and apply to jobs on LinkedIn every week. Maybe you knew that, maybe you didn't. But I'm telling you right now, 22 million professionals view and apply to jobs on LinkedIn every week. That's week, not year, every week. LinkedIn considers skills, experiences, location, and more to match and promote your job to potential candidates. Think about that. They know your skills, they know your experience, they know your location, so they're matching you with the perfect jobs. That's why 22 million professionals a week are using the jobs boards at LinkedIn. So, LinkedIn Jobs is 40% higher than job boards at delivering quality candidates. Let me let you have that sink in for a minute. 40% higher than job boards at delivering quality candidates. A biz is only as strong as its people, and every single hire matters. You know that if you listen to this podcast, so don't settle for posting and hoping the right person will find you and your role and apply. No, you want to go to linkedin.com/twist, linkedin.com/TWIST, and you'll get a $50 credit towards your first job post. $50! 50 smackaroos! That's right, linkedin.com/twist. linkedin.com/twist for your $50 credit today. Go ahead and go get that $50 credit. Terms and conditions do apply. Thank you again to our friends at LinkedIn. Let's get back to this amazing episode.
All right, let's talk about the ICO trend. I'm a professional angel investor.
And by the way, had you bought, you would have made, what, 2x, almost 2x in...
When he said it's
30
going
days.
to zero.
By the way, you can take a look at these things historically. Almost every time, that's the best time to buy.
Is when the naysayers were saying...
Correct.
It's going
well, because ultimately it's about being a contrarian.
Right.
All value in life is captured when you do, when you are right about something and everybody else doesn't see it.
The Peter Thiel school of thought, yeah. So let's talk about this ICO trend. I invest in startups for a living, and it's quite disturbing to me to see people write a white paper or a business plan, aka a business plan, and take down 200 million or 300 million or 100 million before they have a team or have written code or have shipped a product, some of those things. What's going to happen in the ICO space, and what percentage, we'll start with that, what percentage of these ICOs do you think will ever release a product, and which one of them will ever...
Let me run through these slides real quick.
Let's pop up these slides.
This is the perfect segue.
Yep.
So I was one of the founding board members of Mastercoin J.R. Willett of Mastercoin invented the ICO. We did the first ICO in June of 2013.
You can pull up the deck.
I've been, obviously, in the ICO market since day one. Here's I think, interesting data that will tell you why and what this is happening. The key here is that venture capital came into the blockchain ecosystem in 2013. In 2014, we took in capital that was very similar to the internet in 1995. In 2015, we took in capital that was very similar to the internet in 96. The difference is back then it cost you $5 million to make a website to sell shoes online. Because of open source, because of SaaS, because of Amazon Web Services and all these other things that are coming, you can build businesses for a small amount of money. But what you'll see is it went essentially flat last year. We didn't see an increase of venture capital flowing into the industry, but what we did see was a continued influx of entrepreneurs and the quality of entrepreneurs continuing to increase.
So this is, to be clear, there's 132 deals in 2016 for $550 million by venture capitalists into blockchain crypto companies.
Yeah.
This is not ICO offerings to
this
civilians.
is pure venture capital.
Venture capital into the space has flattened.
So this is what happened is VCs were not seeing, there was no M&A activity, and they weren't seeing the growth, the revenue, and the things they wanted to see, and so they didn't continue to accelerate investment. And entrepreneurs, being tenacious and trying to get the job done, said, well, is there another way? And so the ICO model over 2014 and 2015, was something that was mostly pursued by people that couldn't raise money any other way, so it was normally mediocre deals, or
funding of last resort.
It was funding of last resort, or they had a philosophical view that this is core to their long-term business, like Ethereum. Ethereum could have easily raised money from Andreessen or Sequoia or any of these groups, but they wanted to not have VCs. They wanted to be a decentralized autonomous corporation, blah, 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 with a foundation. So there were some very good projects over the years. But what happened last year is this, because there wasn't more VC, what happens is 64 ICOs happened, and they kept accelerating over the course of last year, taking in a little over $100 million. But there was one other thing that happened, because I'm not including the numbers of the DAO. The DAO took in over $100 million. It's the best example of what not to do. Security audits, there's no room for error when you're playing with this kind of money. But what it did show is that the model scales. It showed great entrepreneurs in Silicon Valley that an ICO can bring in over $100 million. And some of the very shrewd entrepreneurs said, this is interesting. This might be a better route than taking venture capital. And so what happened? We've taken in between $2.5 and $3 billion so far this year. This is the rate at which capital has been coming into ICOs. But what's really fascinating is this. ICOs are taking in 4 times as much capital as venture at the early stage. We're 4 times bigger than venture capital in terms of early stage venture. And that's because all of our projects are early stage. Series A, B, C, that's also going to come. This model is going to dwarf venture capital. Venture capital is, as a structure, is going to die over the next 10 years. That doesn't mean that VCs are going away, though.
Brock, it's by choice. I mean, to an extent now. I think by last year, we went out to raise capital, looking at a VC round, and trying to do a Series A for a company. I mean, we'd raised just about 3 at that point. So it was August, going to September last year, we're looking to raise, 5, 10 million, around about there. We were hoping for a $10 million raise. And literally, I spent all my time trying to explain what blockchain was to VCs and how it worked and how Bitcoin worked. And questions were like, isn't Bitcoin dead? And the usual stuff came out. And then I realized all I was doing is educating people who didn't really want to be educated at that point in time about where this world is going. So you can imagine a year ago, identity and blockchain, not hot. Right now, it's extremely hot with the Equifax hack recently, etc. So it's just, with entrepreneurs, you see the future before it happens, and you got to just keep trudging along, and eventually
and
the window
opens. How many VCs did you meet with when you tried to get a Series A, and did anybody make an offer, or did you and when did you decide to do the ICO, which you raised, I think, $30 million in?
Yeah, we got one term sheet, which we actually turned down in the end because the visions weren't aligned with where we were going to go, but we probably met with 30 or 40 VCs, and it was just shocking how there was just no market for blockchain-based startups. And no
I was shocked.
Yeah.
Because, Vinny and I
I sold my last company.
We worked together closely. I mean, you're dealing with a world-class entrepreneur that had past success, who's focused on exactly where the market is going, if you have any vision. And, I was shocked. Yeah. I thought you were going to have multiple term sheets from top.
Well, VCs always go out and say, we just back the team, we don't really care about the idea. But when the great team comes with a great idea, they don't understand. Then, well, the team doesn't matter anymore because the idea doesn't make sense. So like, which one is it, right?
So now
there was no VCs in the Valley that understood anything about this business a year ago.
So then you decide, instead of taking money from VCs who don't get it, but are in the business of getting it, that you'll take money from who? So, who gave you the $30 million?
So we in January, I'm on a TV show called Shark Tank in South Africa, and one of the deals I did last year was a deal called Augmentors. It was a gaming startup. These two kids came in front of us, and they had this great idea, and they couldn't figure out how to create rarity in the gaming engine. And on the show, I actually made them an offer in Bitcoin. We did the whole deal in Bitcoin. It was like the first Shark Tank Bitcoin deal in the world. And there's like 13 franchises, whatever, around the world for Shark Tank. And then I said to them, we're going to do an ICO. And we did an ICO in January, and they raised $1 million selling their token, Databits, in the open market as an ICO. And after that, I was like, okay, this is actually interesting because literally, it's clearly working. People are willing to buy these assets. They're willing to transfer Bitcoin for it. So as Civic, we're going to go out and do an ICO. And we basically looked at doing it, trying to raise between 5 and 10. And eventually, the market got really hot. And we said, okay, we're going to set the 33 as the number, the real target. That gives us enough runway to get where we want to go. And we had over $100 million worth of commits. And we still capped it at 33, though.
So you still capped it?
Yeah.
That was a mistake.
No, I don't think so. So one of the things that, when we analyze the market, one of the things you don't want to do in running an ICO is you don't want to absorb all the liquidity right into your token sale up front. Because it removes the notion of, in my opinion, removes the notion of scarcity, which means that everyone who would buy your token bought it in the ICO. Who's going to buy it afterwards? How's the market going to trade?
You have no aftermarket support.
There's no aftermarket support. And because we literally had 3x the demand for what we sold, right now our token's trading at 30-odd cents or as high as 80 cents, and we sold them at 10 cents. So everyone who bought,
When they buy these tokens, they don't own equity in Civic.
No,
it's not equity. It's a utility token.
Yep.
Which means they own what?
So I've written a blog post about this, my blog, vinnylingham.com, check it out. Really spoke about what I call as a utility token, so public utilities. The world's changing right now, so you're going to have a situation where ID verification is purchased as a utility. Wi-Fi tokens can be purchased as a utility, etc. So these are things where in the world of tomorrow, these resources can be bought and owned, and it's publicly available, and people can just buy and use them. So think of it as building, electricity, internet, etc. These are public utilities, and that's what the company, as the equity structure, we're busy building it. We own a portion of the tokens that are out there, but we're creating these utilities that are just basically open for the market.
So the people who are buying the Civic utility tokens are buying it though because they're speculating and they want to own the upside, but in reality. Partially.
So we have companies buying it as well, and these companies are partners of ours. So right now today, if you think about Civic, think about an analogy I like to use is like Twilio for identity, right? A simple set of APIs you can plug into your website and do remote ID verification on anyone from their mobile device, and that requires a token to actually process the transaction. And so that's what we're basically building is a decentralized ID platform where all the data isn't stored on one central server that can get hacked. It's distributed across millions of devices. So Civic can't get hacked because we don't store any data. And if you get hacked and lose your data, well, that doesn't impact everyone else on the network either.
All right, let's look at the top 10 here.
So Dan Larimer was the inventor of the concept of a DAC. He invented what's called Delegated Proof of Stake, or DPoS. The first thing he built was BitShares. His second project was Graphene, which did Steam it. And his third project is now EOS, which is the kind of evolution of scalability. We should be able to do millions of transactions per second. We launch June 1st of next year, and this is when shit gets real.
And so that's when you've raised $185 million in stage one, but you're selling 2 million in tokens a day, so you're doing it for a year. Mm-hmm. 2 million times
345 days, but yeah.
Yeah, so 345 days, okay. So that's like $700 million that you could potentially raise?
We're almost there.
You're almost at $700 million. So your EOS is now by far the largest.
Yeah.
How are you going to deploy $700 million or $600 million? How do you deploy that? And does it worry you that you're going to hit $1 billion raised before the product's in market? Because companies that usually get $1 billion influx of capital have billions in revenue. And people get stock in it because now they're paying for this. They're not getting stock in EOS. They're getting tokens.
It's even more complicated than that. But for the purposes of, I think, trying to give the shorter answer, yeah, we'll end up doing well north of that. Now, testnet and things of that nature, people are going to be developing on. If I had to project when we launch on June 1st, there will be no less than 1,000 applications launching simultaneously with us. The whole development cycle along testnet you will be watching build. This will be the biggest product launch there's ever been. I mean, this is like Windows launching, but much bigger.
And what will it do? It'll just be a Bitcoin, Ethereum competitor?
Think of well, they're not really competitors. I'm chairman of the Bitcoin Foundation. Obviously, I was one of the main, and continue to be one of the main supporters of Ethereum. They're different things, and you're going to have different blockchains to serve different functions. Facebook gets 52,000 likes a second. There are a lot of things that require high transactional throughput and things that specifically shouldn't need customers to have tokens to pay fees. EOS is focused on kind of that mass scalable enterprise stuff, and that comes with a trade-off. And that's where it's not proof of work. This is delegated proof of stake. And so I think that there's going to be multiple successful projects, and the things that will define those that are successful versus those that are not are, did they design their products to be good for their end users? Did they end up building a vibrant community of people that are contributing? Dan Larimer obviously has the biggest following of developers in the world after Vitalik. So we already have. The development pipeline of things coming we'll have never seen anything like it. Hence the reason why our token sale has had the level of contributions it has. We also don't allow U.S. persons to participate.
So you're going to raise $1 billion from outside the U.S. for tokens to build this huge platform?
At least a couple would be my guess.
A couple of billion?
Yeah.
Maybe even $2 billion. So some percentage of Bitcoin and Ethereum will shift over into EOS.
Yeah, that's...
And this is
there's a lot of interesting projects in the space.
Huh.
I'm also one of the main advisors to BankCore. I'm also a major investor in Filecoin, Kin.
And you didn't take American investment, so Americans have been locked out of this opportunity and/or protected from it by the SEC.
Yeah, well, so the problem generally is that 99% of your risk comes from the United States, and only about 15 to 20% of your capital. And so I generally tell most entrepreneurs looking at a token sale or an ICO to block the U.S. if they don't know what they're doing, if they don't have the budget to have the best lawyers, because that's where all your risk is. I go, you can leave 15 to 20% of your money on the table and mitigate most of what are your long-term risks. If you want to play in the United States, you better know what you're doing. So with BlockchainCap, our third fund, I did an ICO of a security. I did the only, ICO of a security to date. I did that earlier this year, and I wanted to show people that it doesn't have to be a utility token. A security token has very different features that it can provide. You're able to offer your users rights. You're able to offer them equity in the form of tokens that are liquid and tradable. You can be able to offer them royalties, dividends. Think of if you're an artist making a song or a video. You can make a song and basically sell tokens, which are the intellectual property of that song. So you can finance your art through contributions from fans that would own part of the song, that would pay dividends or royalties directly to you as a token holder. This is where the market's going to go. Essentially everything becomes peer-to-peer over time, and all of the middlemen that are the capital allocators, they're going to have to be really good. They're going to look like hedge funds. There won't be VCs in the future that can sit on capital for 10 years and take their time. They're going to have to basically mark to market and perform more like hedge funds. The future of this stuff is going to be liquid.
That's my other blog post around capital formation.
Oh, that's the other huge thing that's changing is I should have left a slide in here on that this is a global phenomenon. Historically, most of the world's innovation has been occurring here on the west coast of the United States. And the reason why is not that we're the smartest. It's not that we're the best. We're pretty good. But
access to capital.
We have access to capital.
Yeah.
There's so many deals because I invest globally where it's like, this is a deal in Germany. I passed on it even though I love the team. They were further along, but I preferred to invest in the entrepreneur here in the Bay Area because I knew, where's that next 20 million going to come from? I have to think through subsequent financing.
Well, it's not just that. Typically, if you go to other parts of the world, there aren't companies don't have a corporate development position in the company outside the US. Outside of Silicon Valley, they're not, you try and get a corp dev role in Cape Town or Germany. People don't have teams or people dedicated to buying smaller companies. So as an investor, your liquidity options are very limited. In the Bay Area, you can always find you need to sell a company. Jason's very good at this. You'll help a startup, find a corp dev guy to chat to, acqui-hire, whatever the case is. You can get your money out or at least roll your shares into something else. The rest of the world, they just die or they just become zombie companies. This is different now because now you're investing in something which is liquid. You want to get out, you get out of whatever the market price is.
Which means there could be runs on the market.
Absolutely.
And a lot of the great wins that have occurred is because people were locked up. Isn't long-term being locked up in a share also virtuous?
I think.
But that's different, though, Jason.
I want to see founders. There's two requirements for me to invest in a deal today because it's just called you continue to Kaizen and improve everything. One is that I expect to see founder lockups, things of that nature. I don't want to see founders in a position they can sell tokens right out the gate.
Which is what Tezos did. Tezos took 10% or each or 20% of it.
They capitulated at the last minute. It was supposed to be 8%, and then I think they reduced it down afterwards. I can't remember what the number was, but after
I didn't like that term. Yeah. I felt that these are some of those examples
Explain what
of maximum
the term was.
greed. I mean, basically making a fortune on
the founders got 8%. We're going to take 8% of the money raised
before having delivered anything.
Yeah.
So they took $16 million of
they were going
each.
to, and then after a lot of, and literally in the last week or two before it happened, they changed their mind.
But they still took $10 million or $20 million
I don't know what it
in
was.
fees, basically, for running the ICO, which makes one wonder what's their motivation to release the product.
But so here's the other thing, Jason. Like you can't compare tokens to shares, and shares are basically.
But the people buying them are clearly buying them to watch them appreciate, which makes
it's
them
the same as Jason. You can make an argument around penny stocks in the US. Why are all these penny stock companies listed on OTC markets and US stock exchanges? Why?
You can also talk about Beanie Babies.
Yeah, but so what you guys just described though were scams that were short-lived and that tarnish the people who participated in them forever.
I don't think Tezos is a scam.
No,
Okay, but when you mentioned Beanie Babies as the corollary or pink sheets to this.
I didn't mention pink sheets, but there are. Yes, this is like pink sheets. It's small cap, micro cap stuff, and
every now and again you're going to find the small cap company finds a breakthrough cancer drug that gets bought by a big pharmaceutical company.
Does that actually happen?
It does happen.
Yeah,
it does happen, and that's the point. Most of them are they're crap. Okay, like who buys?
So most ICOs are crap.
Yes,
like
absolutely.
most startups, 90% of startups fail in the first 3 years.
Exactly.
So
how is this different? Most startups fail.
Well, I think the magnitude. The difference would be that when we give money to people as angel investors, we vet the product and the customers, and we wait to see some level of performance.
But let's go back. But hold on. Let's go back.
But these ICOs are largely
Jason,
unreleased.
let's go back to pink sheets. Go back to pink sheets.
Yeah.
Okay, that's a regulated industry. It's regulated by the government, etc., and it's 99% crap.
Right, and most people, when you say pink sheets, roll their eyes and say, stay away.
Right.
Yes.
So is that what you hope for
as they
ICOs?
should.
That's your goal?
99% of ICOs are going to be junk, absolutely.
But you state your reputation on being part of the pink sheets?
No, you're missing the point. There are still some valuable companies that make breakthroughs. It's about experimentation.
Got it.
So there'll be a lot of these...
The people who are going to lose all this money, because we'll agree that a larger percent of these will die than typical startups.
Yes.
We'll agree with that?
Well, about the same ratio, probably.
Actually, I think that you probably see a higher success rate at some point because it's a superior architecture where you've aligned interests in a way that's superior, and you've said, instead of me building some proprietary thing, in a closed room, I'm trying to build this project and I'm sharing all of my views and insights with all of the people out there because I'm trying to build a community. And so I think the community element, over time, the fact that anyone can participate that wants to and contribute to a project should improve the odds over time, not decrease them. But, I don't have a crystal
Jason, why do you have a portfolio of 300 startups?
150.
Whatever.
Well, yeah, because the wins make up for the losses.
Exactly, and that's going to be the exact same thing that happens in this space. The wins are going to cover the losses in spades.
Listen, as long as the people who are in it understand what they're buying is not shares in a company, which I don't believe that majority do. So that's one of the problems I have with it. So how do you address that? That most people are speculators, we'd all agree, but they're not buying equity. How do you deal with that, Brock? How do you deal with educating the consumer? Or does it not matter because these are all Ethereum, Bitcoin millionaires who are just...
Hold on, I spend a lot of time educating it. Don't invest in anything you don't understand. And anyone that tries to sell you, buy my thing, that should be a red flag. They might be
So buying ads for your ICO, bad sign.
Well, not necessarily either. I get that because if you have $1.5 million on Facebook ads and things right now today, you're going to probably see $20 million of ICO capital, but that's changing. The market is obviously changing every month and rapidly. So the main thing is FOMO is driving a lot of this. You have an asymmetry of information very similar to the 90s, where people that have the knowledge, there's a small number of people. You have crazy returns, so you have a huge influx of newbies that want to get in on it. Now you have every con man and criminal and cockroach possible there in the middle trying to rip you off. So if you don't understand something, don't do it. You're not late. There's only 10 to 20 million people in the world playing with this. This is where the internet was in probably still only 93.
So none of us here can feel bad that we're not doing this.
Yeah, the Netscape.
Plenty of money to be made.
Yeah, the Netscape moment hasn't even happened yet. I would definitely get in. Yes, we're in a bubble of some sort, but the question is, when did that... they said we were in a bubble in the internet in 97, 98, 99. Do you know what the market cap of internet or tech stocks was during the height of the dot-com boom? It got up to 6.7 trillion. That was when it was on a Western phenomenon only, and that's not inflation adjusted. I can make a compelling argument that it should have been 50 trillion if you had the similar elements to what we have. And what people were betting on at the time is the future potential of a new technology. We're at 150 billion. This is probably 96 in terms of where the bubble is. And there will be minor corrections along the way here, but if this is at all similar to the internet, and I would make an argument that this is the new internet. I think the entire internet's going to go away as we think of it. Think of the internet we use today as an insecure data transport protocol. The blockchain is adding the security layer to all of it. So we're now a secure data transport layer.
And a currency.
We add everything. The problem is it was just it was an insecure data way of transmitting data. Now we can transmit data securely, which makes not just these limited number of market opportunities available, we can now do anything on the internet. It's the new internet. Everything has to be rebuilt to be secure, and it needs to be rebuilt in a much more simple form. It's got to be designed for something like a blockchain, because that's how you get rid of the attack vectors.
There's a big audience around the world that's been trying to get into technology investing, and for various reasons. Like from a regulatory perspective, you can't go, if you're a South African citizen, you can't go and invest in the US stock market. You don't have a social security number, you can't participate in the market, there's laws around that, etc. So what's happened over time is that the world's come together and said, well, we want exposure to these high-risk assets. I wrote a blog post about this, which basically I explained that the millennial generation, they don't care about losing 10 grand. The guy wants a lottery ticket. He wants to buy the next Ethereum, the next Bitcoin. And so these people can't get access to foreign assets in the US because they don't have relationships with the Sequoia to get into their funds. And even if they did, they wouldn't have enough money. But this gives them an alternative. So I think you're going to see the way the world shapes. And Brock's right. It is bubblish right now. There'll be some corrections. And we don't know how big it's going to get. But there are going to be some big winners coming out of here, which Ethereum, Bitcoin are clearly already there, and a few others lining up. And there's going to be lots of losers, but net, I think we're going to be better off in the world in 10 years' time as a result of this new revolution of the way finance is done and where you're able to attract capital from parts of the world that previously didn't have the exposure to tech.
So you guys both agree to come back next year, sure. And we'll make a short flash video, a short summary of this video. Bitcoin Classic. What is the Bitcoin with the largest...
Bitcoin Classic. There's actually another...
There's another one Classic, I know that. Well, Bitcoin, whichever Bitcoin has the largest percentage of miners, or CPUs, or whatever, what do you call it?
And that's contagious. So
that's how do we make the bet? Let's just make the bet right now. And the bet will be for the Bitcoin price. So we say 6,000 is the number right now.
Okay.
So we're going to bet on Bitcoin.
So I think the only way to do this is not to pick which Bitcoin. Let's say what's the aggregate price of all the Bitcoin forks combined.
Yeah, that's right.
Okay, yeah. So the Bitcoin forks. So right now, what is it?
6,000 and change.
6,000 change.
6,000 what?
And change, whatever it's.
6,000. Got it.
6,100, whatever. We'd have to go look. Right.
Oh, if you added the 3 coins together.
Or the 4 or 5 coins.
The 4 or 5. So you're at 6,300 or something now. Yeah. Okay, so everybody write down on a piece of paper what you think it is. I'm going to write down here. Okay, you don't have a piece of paper. All right, here, take this. Write it down. Don't look. Mm-hmm. See, Brock is a poker player. Played with him before. He's not even looking at what he's writing. He's looking at his smile, trying to get it read. Just write one number. What are you doing? Warm peace over here?
I'm giving you a range.
No range. You have to pick a specific number. Whoever's closest wins. The other two parties are going to have to...
I'll take the middle there. See, I'll do that.
Okay.
I'll take the middle.
Is this game kind of like The Price is Right? If you're over, you're out?
No, it's just within dollars. Okay,
So I'm not
I have
going to
yours.
bucks then.
I have mine. Okay, so on this stage, okay, now, Brock, you just tell us yours. You have to
Okay.
write down because we have this.
The number a year from now, it's going to be one of two directions, meaning either...
Give us the number.
Yep, no, things stay together, or we're going to see a hit in the market. I'll just go with an aggregate of $10,001.
10,001. Vinny says 17,500, correct? Okay. And JCal says 11,500. So...
I got the
And
under.
on the Bitcoin.
You got the under.
On the Bitcoin.
You
day.
nailed the under.
10,700 and everything's good for me.
I'm supposed to be bearish, guys.
All right, well, there you have it. What
I
are
like
we
that
betting?
I'm the most bearish guy.
What are
but
we
I
betting?
also try to preach practical.
All right, so what are we betting? 1 Bitcoin?
I'm happy to bet a Bitcoin.
No, I'm not betting a Bitcoin. I'll bet you guys
I'll
sushi
bet you whatever
dinner.
you want.
How about we bet sushi at Omakase at
Deal.
Deal.
whatever.
Deal.
There
We'll
we go.
cap it at $400 a person, okay? That's what it's going to cost. You guys have to shake on it too. All right, let's hear it for Vinny and Brock for sharing so much knowledge.